This video is going to explain what actually trading futures is like and how to trade, how to get a broker, and kind of where to go from there. So, the first thing I'm going to tell you is a lot of people think like, how much money are you putting into a trade when you trade futures? You're not like, it's not like you're putting in like options. You could buy like $500 worth of options. It's kind of different with futures. You're using leverage, and um, I'm gonna ask ChatGPT, okay, the best way um to explain leverage, because you guys need to understand this, okay? Now, look at this. All right. It says, all right, imagine you're playing on a seesaw in the playground. When you sit closer to the center, it's easy for both sides to balance. But if someone much heavier sits on the other on the other end, they can easily make you go up and down without much effort. So, it's like using a small amount. Sorry, I had to read that for a second just to make sure it's the right leverage. It's like using a small amount of effort to move something much bigger, heavier. So it's like you using $500, but it's giving you leverage to move something really big. That's not really $500. It's like $10,000. Just like how a heavy person on a seesaw can make you move with very little effort, right? So in business, leverage is when you use a small amount of money or resources to control or influence something much bigger. It's like getting more of what you have by using it smartly. So like you're basically, if I use like 100 times leverage and I'm using $100 for something, in reality, I can make much more than $100 if I take a $100 trade, but it's also 100 times leverage. I could make like $1,000 off that trade easily. If I'm using $100 and it's like 2x leverage, I'm probably only like I can easily make like 100, but I can't make 10,000 like that. Like, so it's kind of using a small amount of money to make more than what you actually have. And that's kind of how futures work. So the first thing I'm gonna say is like when you put $500 into a futures account, okay, like you're basically all using leverage. So I think like the minimum requirements for this broker called Tradeify. Okay, let me just again. This might not make sense to you now, but I'm gonna keep explaining. Minimum amount to deposit to trade micro contract or Tradeify. All right, so it's $250. Okay, because again, it's $50 per contract, and you have to have $250 in your account to trade micros because it's all leverage. And it's like, what if you have $100 in your account and you're trading with 100x leverage, but you lose? You're gonna lose a lot more than $100. So that's why this is like a safeguard just in case you do lose, because you can lose more than $250 because of the leverage, if that makes sense. And I think they stop you from doing that anyways. So that's kind of what leverage is and how it works. It's not like options where I can literally just put in like $500 and make a trade right there and it's $500. Like this is all leverage. And even like I can't fully explain leverage. I just kind of trade it, and that's my explanation of it, but some people have their own different explanations. So what's like an actual broker to get started? Like how do you actually start trading? Okay, so this platform that I've used for all my videos it's called TradingView. Okay, you can simply look this up. I think this is the best thing to use. Do not use anything else. Literally just use TradingView. It's so good. Um, and there's a couple different plans um, you can buy. I'm not going to go over them, but there's basically like a premium, there's a basic plan and whatever, and it gives you different options. Like the big thing with a premium is you can have more indicators, but I don't really use indicators, and I'm guessing most of you won't either. Now that's fine, but the big advantage of the premium is you can get the second charts, and I always use the second chart. Like 30-second chart is probably my second favorite time frame after the 1 minute, but you can use the second charts, and I just like looking at them. So, but that's the big advantage. You don't really need premium. The thing that you will need is you'll need live data. So there's basically 4 tickers or whatever you should pay attention to before actually starting an account. And I'm going to share how to start an account, but you should be starting with these tickers. And I'm going to go over the cheap version first, and I'm going to go over the paid version. So the cheap version is US 100 and US 500. basically what this represents is US 100 is the NASDAQ. Okay, so if I just type in the NASDAQ on Google, this is the NASDAQ. It's currently sitting at 16,103. And that's what US 100 is. And yeah, US 500 is SPY, or in other words, the S&P. So if I just type in S&P is sitting at like 5,000 right now, I think. 5,149. Okay, that's what US 500 is. And US 500, US 500, this is what I used to use when I first started, because you don't have to pay for this data. So this equates to SPY and QQQ. If you guys trade options, SPY and QQQ, this one would be SPY, this one would be QQQ. But these are just the futures versions where you get all the overnight data, what happened during London session, what happened during Asia session, whatever. So this is US 100. Now, there's nothing wrong with using this. The only thing that you're going to notice, like, is a difference between US 100 and NQ, which is the other one, is you're going to notice a little bit more like volume imbalances. So like here, for example, see how we have like this little gap here in price where the candles, remember what I taught you about body candles? So see how this see how this close of this candle, right? This close does not line up with the open, and see how it makes this little gap here. Right here, you can see it doesn't do that on the actual contract. So this is where it's going to mess you up a little bit, which is why you should strongly recommend going to NQ and paying for the live data, which is not very expensive, but I do write that off as a business, like as a business expense for my trading technically. So I'm not going to recommend you to do that, but I mean, that's what I do. So this is, again, if you're just starting out and you're literally just using IFVGs, fair value gaps, whatever, I mean, you could try using this if you want to be very cheap. But again, there's going to be some bad differences that are not going to help you. For example, this is another one. It looks like we have equal highs here, but in reality, these are not actually equal highs. And this makes a huge difference, because when I go to teach you guys about equal highs and equal lows, it's going to be a huge difference, because this to me, this looks bullish, but this to me does not look bullish because there's no equal highs. So, and you'll learn and understand what the meaning behind equal highs at some point. But that's one of the downfalls of using US 100. So you can use this for the start, but it's not going to help you once you start to get good. Same thing with US 500. I mean, I'm not going to go over US 500, but the same thing. I'm just pointing out for people who really are struggling financially and really need to be as cheap as possible, I just use US 100 and US 500. Now, if you do have the money, I would strongly recommend paying for the actual contract. So there's four of them. Okay, there's NQM 2024. So I'm just going to do NQ 2024, and I'm going to put in a filler here. The month. There's going to be 4 different contracts. It's like options, how options expire, if you guys know anything about options. I'm not going to teach about options, but I know some of you probably are coming from options. So there's basically an expiration date. So it's always going to be NQ followed by a letter. I think there's June, March, I forget the other 2. Oh, December, June, March, December, and I forget the other one. Maybe it's not November. Might be September. I don't know exactly. I think it's September. But there's basically 4 months, and you're gonna have to switch them at some point 4 times a year, and it's basically NQ followed by the letter, and then it's gonna be the year. Same thing with ES. And right now you can see I'm using NQM 2024. Okay, this is the month we're on right now. Yeah, that's just what it happens to be. And then the other one, so these are like the big ones, and there's something called mini versions of it. So this is called the mini. The NQ is called the mini, and the ES is called the mini. There's actually like these micro versions of these where you can trade with less money. And basically you just add an M in front of it, standing for micro, and it's the same thing. So it's going to look like this. And basically you can make a lot more money in this, but less money on this. And this is what I recommend starting off. And I even trade micros still to this day in my funded accounts, because I just think that's the best thing you can do. So it's always going to look like this format. This is like the CME data you're going to pay for, and these are the main four you'll look at. So how do they actually work? So NQ is the big one, and ES is the big one, and then this is the small one, this is the small one. Now, I'm going to look at NQ first. Okay, how does NQ move? Basically, NQ moves $20 per point. All a point stands for is, let's say, $1 for simplistic sake. So if I just draw a vertical line here at, let's see, 18,258, and then another one at 57, from 57 to 58, that'd be considered $1 or a point. So this is 1 point. Now, in the span of price moving from this red line to this red line, that's $20 times the amount of contracts you have. So if you have 5 contracts, that would be $100 in 1 point. And you can see we move a lot more than 1 point, don't we? So literally this candle right here from 8.6 to about 7.4, that's 12 points times $20. Okay, do the math. That's a lot of money. And then imagine if you took 5 contracts, that'd be like $1,000. Okay, so let's say this is a 10-point candle and you had 1 contract and it was $20. This would be at minus $200, right? This would be a $200 candle if it was 10 points, because the NQ contract moves $20 per point. Okay, so 20 per point times number of contracts you have, and yeah, so if I take 1 contract, basically 1 contract, I put it here, and we move 10 points. So we move 10 points, you multiply that by 20. So 20 times 10 times 1 would be 200. Or if I took 5 contracts, that would be 1,000 instead, because 5 times 20 times 10. So let me just show you an example. Well, let's say short here, and I sell 1 contract. So the price is 18,275. When we go down, we come to 18,233.50. Now, if we do the math, 75 minus 30 is about 42, something like that. 75 minus 32 is, yeah, about 40, or no, 32. So 33 plus 32. I'm trying to do this off the top of my head. Give me 1 second. I'll just pull up a calculator to make it easy. I think it's 42, but so 75 minus 33. Yeah, 42. No, 42, because we move 42 points, times the number of contracts, which is 1, times $20 per point is about $830. Right? Imagine if you took 2 or 3 contracts, though. That would be $1,600. That would be $2,400 just in 1 candle. So this is how they move. Okay, this is how NQ moves. Same thing if you buy. So let's say I bought right here. My buying price is 18 to 18.75. All right. Now this candle moves from 18 to 18.75 to 18,234. That's about 17 points. So you do 17 points times the number of contracts, which is only 1 in this case, times $20 per point, and that's how much you can make. So that's kind of how this works on NQ, and yeah, pretty self-explanatory. Same thing for buying and selling. Now ES, same thing, but this one is actually $50 per point. So let me just go to NQM real quick. Just copy and paste this. And I'm going to give you my recommendations, but I don't trade ES. ES has just been garbage. You can I look at it all the time, but NQ is the main thing I trade. So this one is it's changing the number to 50. And I'm not going to do like a whole nother thing like I did with NQ. Just know that for ES, it moves a lot less points, which is why this is more. So like this candle right here, if I sell, this candle right here moved from 5221 to 5213. And then Q, that was like a 42-point move, but on ES, it's only 8-point move. So it's 50 times one contract. If I took two, it'd be times two, times number of points moved, which in this case, it would be 8 points. So that equates to about this, $412.50. So what you'll notice with NQ is it moves a lot more points, but it's also less per point. And then ES moves a little less, but I mean, yeah, that's the basics of it. And if I pull up on NQM here, on ES, the problem with ES is you're gonna see a lot, like a little more barcodey. It's very, to a new trader, you're not gonna notice at first, but it's a little more barcodey than this, just a little more, and you'll learn that through experience. But that's why I prefer trading NQ, and that's just what I prefer. So just keep that in mind. All right. So that's that. Now, what do I mean by the micro version? So the micro versions are just M ESM 2024 and M NQM 2024. Okay. And basically, these are divided by 10. So while ES was just, or while NQ was just $20 per point, okay, you just divide it by 10. So this would be $2 per point. And it's the same concept, right? This candle right here, the opening price in this candle is 18274.75. So if I take a sell there and I play the candle, it's just everything's going to be divided by 10. So this is $85 a profit, or 83, instead of $830 a profit and 50 cents. So because we moved 74 to 33, which is about 42 points, times one contract times $2 per point, which equates to about this. So this is very, very simplified. This is just how the futures contracts actually move. And again, you're not when you sell one MNQ, you're not actually taking, like, it's not like a money amount. It's all leverage. So just know, like, when you're selling this, you could lose. Like, if your account is at $50, you could go negative. You could literally get margin called and go negative. Okay, you don't want to do that though. So yeah, so that's kind of how futures work. So how do you actually open an account to trade this? Right now, I'm trading in replay mode. Now, what I'd strongly recommend doing before opening any account is this. This is going to be the most important part of the whole video. Ready? 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 Watch, watch. Paper trading. You're going to click that. You're going to click connect. And you're going to trade on a paper account for a couple months, because you're going to need to learn how futures work. You're going to need to learn everything I'm teaching you. And this is just paper trading, paper trading, paper trading. I wish I listened to people who told me to paper trade when I was starting. I wish I did. I never did, and I lost a lot of money. There is an alternative to paper trading, which does invoke a little more emotion, which I'll go over in a little bit, but I'd strongly recommend paper trading before opening an account. So this is a charting platform, and these are all the brokers. So if I look at, these are all brokers, and this is where you're going to create an account. You can create an account on any of these, but your best bet to create an account is probably going to be Tradeify, this one right here. So it's this blue symbol, and literally all you're going to have to do to create an account and deposit money is just type in Tradeify on Google, and I'm not going to log in or anything, but you can open an account, you can log in, and when I first started, I put $500 on Tradeify, and I literally just traded one micro. So again, this is the micro contract. I literally, when I first started Tradeify, I put $500 in, and I literally started with one micro, and I lost that $500 because I didn't know what I was doing. But I'm just showing you. I think still think it's a good plan. It's better than putting like $25,000 in and going right to minis, because you're gonna lose a lot more money. See, some of you guys watching this video, you're gonna be like, "Oh, I'm not paper trading. That's not gonna help my emotions." That was the issue with me. That didn't help my emotions either, so it didn't help me get better. But for the people who are good psychologically already and they know that, then I would paper trade and find an edge until you get that edge. For the people who are not good at psychology, I mean, you're gonna have to trade a live count and lose money. I hate saying that, but that's how you're going to learn. And that's what happened to me. That's how a lot of big people get good. So just know that. Now, what you're going to do is obviously go on Tradeify. You're going to open an account. And you can literally contact support. They can tell you how to open an account, but you're going to have to fill out this like survey. Make sure you click you're like a non-professional trader. And then, yeah, once the account's created, you can basically just deposit money in. It's as easy as that. I mean, you're just going to have to, you're going to have to fill out stuff, obviously. I think you'll have to give your social security or whatever, but it's pretty straightforward process. And yeah, I mean, this is the #1 platform I'd recommend if you're just starting. And I'm not going to go into anything else. I mean, there's also something called Ninja Trader, which bought Tradeify. This platform, though, is a lot more complicated, and you can't connect this to TradingView. I'd strongly recommend trading on TradingView. Okay, this is going to be your best bet. So I'd recommend doing Tradeify, and literally, like, that's how you actually trade. Like, you just go on Tradeify, deposit money, and on a personal Tradeify account, it's a $10 fee to connect Tradeify to TradingView. So you're gonna have to pay $10 a month for that, but it's definitely worth it. Again, I'm gonna write that off as a business expense, not financial advice. Obviously, talk to your CPA about that, but that's what I'd recommend doing. Now, there is a whole different route, which this is what I strongly recommend a lot of you do. So we talked about paper trading. We talked about how to start a broker, which you just type in Tradeify and you can log in. You can make an account. This is how to actually deposit money and start trading this for real. But what I'd recommend doing is using something called a prop firm. Okay. So a prop firm, okay, is basically a company that gives you fake money, like demo money. And it's basically you're trying to pass a test. And if you pass the test and get good enough, you can actually get paid real money. And these accounts, they're like 20, but like on this, I trade on something called Apex. Okay. So if I just type in Apex, it's this site right here. It's called ATF.com, ApexTraderFunding.com. And basically, if I just log in real quick, just to show you guys what it's like, you can sign up for different plans. So basically, they have a bunch of different size accounts. So under the Tradeify section, you can sign up for a $25,000 account, $50,000 account, $75,000, all the way up to $300,000. And they run a lot of these discounts, and right now it's 80% off. And if you use code Dodgy, obviously that's my code, or any other code, I don't care. But I mean, Dodgy would be the most easy because a lot of you are probably lazy. If you use code Dodgy, DODGY, you can get like an 80% discount off these accounts. And I wish I started trading these sooner because, one, I hate paper trading. I like it more now that I know how to trade. But when I first started, I didn't think paper trading helped my emotions. Now I've kind of controlled my emotions, so now I kind of like paper trading better. But that's the problem with that. And the problem with putting real money in is trading your own full money is you're very emotional. I think prop firms, I think this is a nice really in between where you're paying like $30 for a 50K account. You're paying like $50 for a 100K account. And if you lose that account, you're not losing $100,000. You're losing $50. Now, keep in mind there's rules. You can't go below a certain level. So like a $100,000 account, if you go below 97,000, you basically fail the account. But it's literally just a monthly payment, and usually most people pass by the first month. If you're starting new, then it might take you a couple months. But think about it. That's like $60, and even if you lose it, you're losing $60. Imagine if you put $2,000 or $3,000 of your own money in a Tradeify account, and you lost all that $3,000. Now imagine you bought a $50,000 account on Apex for $50, and you spent a total of $50. And you lose this account. You're not losing $50,000. You're losing $50. And at the same time, you still have that emotional aspect because you're still paying some money for the account, and it still feels real, even though it's technically not. So that's why I recommend this. This is a really good in between of paper trading and putting money in your own account. And then I think, and these are also better for taxes. Like if you do actually get really good at trading, which, sorry to say it, 70% of you won't. because you're going to give up. That's just how life is. But when you get good at trading, I recommend using these just because it's better for taxes. I don't really trade a personal account. I have a personal account, but I've been trading these much more. And you can do something called copy trading. So you can literally trade 10 accounts at one time and take the same position in all 10 accounts, which is like $5,000 instead of like $500. It really adds up. So basically, I would recommend buying one of these accounts. So literally just go to the site, use code Dodgy if you want 80% off right now. By the time I upload this, I'm not sure what the discount will be, maybe 71%, but as long as you can get like 71 or 80% off discount, sometimes 90, barely 90. They do that like once every 3 or 4 months. Then I would get some accounts. So how do they actually work? So once you kind of I'll go over 50K account, for example. So once you sign up for the 50K account, again, you can read the rules on the site. Basically, sign up for the 50K account, and there's two options, okay? There's two options. There's Tradeify and there's a Rhythmic. Do not do Rhythmic if you want to be trading on TradingView. This is through NinjaTrader, okay? Just don't touch this. Do Tradeify. And when you sign up for the account, you're going to log in. It's going to give you email, and it's going to give you a username and password, and you're going to log into a Tradeify account. So you're going to literally go to that Tradeify website. You're going to click login, and it will literally give you your username and password, and you'll log in. And once you're on Tradeify, if you go to settings, which I'm not going to go to, let me see if I can actually go to it right now. I don't think I can get in. Yes, I can't get in right now. But if you go to settings, and then there's something called add-ons. Oh, I am in. Let's go. Let me show you real quick. So you literally just right here. Okay, you go in the top right. There should be 3 little lines, and you're gonna click them, and it's gonna bring you to this. Go to add-ons, and then go to. There should be a box here called TradingView, and it's gonna say $10 a month. But here's the thing: with a prop firm such as this, it's gonna be free. It comes free with this, so it should say free. So say price free. On a personal account, it's going to say $10 a month. And it should say TradingView. I think it should be right here. It's not here for this one because this is not a real account. But it should say TradingView, and you just click activate it. And you might need to do it once a month because sometimes it unactivates. I don't know why, and then once you activate it, that's when you can log in through here with the same exact username and password, and then you can just begin trading. And that's really it. So the rules, I'll go over the rules a little bit, but let's say buy a 50K account. The rules for the 50K are you can't go below 47,500 in your profit target. Okay, so your actual profit target is going to be 53,000. So you're basically, you can't lose more than $2,500, and you're trying to target $53,000. So you're trying to gain $3,000. And what I tell people is I go, try to do this on a demo account first, like a paper trading account, and then buy an account. But some people like to jump right in, and I think that's fine because honestly, jumping right into that account taught me a lot more. And I'm not going to lie to you. I'm not trying to sell you anything. I'm not trying to make you use my code and get an Apex account because I'm going to be honest, it does make me money, right? Like when you use my code Dodgy, it does make me money. And like I said, you can use anyone's code. I'm not trying to advertise my code. I'm just being straight up with you and literally telling you that buying an Apex account and playing personal money helped me more than paper trading. And it's really depends on your psychology, and like if you can control your emotions and you've traded before and you can control your emotions, then I strongly recommend doing that. I mean, if you can't control your emotions, I think this is going to be the best bet in Apex account because you're going to blow up a lot of accounts and it's going to help you. But if you can control your emotions, I mean, you can try to deposit real money, but just make sure if you can't control your emotions, I would paper trade. Just make sure you have an edge. Okay, you need an edge, obviously. But yeah, if you're emotional, I think Apex is the best thing. Like it's the cheapest prop firm by far. Okay, there's no other prop firm that's going to be cheaper than Apex. I mean, it's very simple, very straightforward to set up. The rules are a little hard, but they're not like they make you a better trader. And I mean, in all honesty, I think that's the way to go. I'm trying to think of if there's anything else I would do. I don't think so. I mean, don't start out with a personal account right away. It's not going to help you. I think Apex and a paper trading. I think those are going to be your two best bets. And you're going to come back to this video in 2 years and you're going to be like, oh, I can't believe like what he's saying is very right. And it is. Okay. I'm good at this, and I don't want to brag, but I am good at this. I'm good at what I do. And I went through everything. I literally experienced everything. So I know, in my opinion, the best route or journey to do. And this is in my opinion. So I'd buy an Apex account. So if you buy a $50,000 account, you can't go below 47,500. And if you do, you'll get some message that says, "Oh, admin can only place trades." Blah blah blah. Basically, just means you blow the account, and then you can go to your dashboard and cancel it. And then if you hit 53,000, which you need a minimum of 7 trading days. Now they do this 1 day pass special because some people, if you go really heavy in a trade, they'll pass in 1 day. But you need a 7-day minimum thing. So what do you do is, if I ever pass an account or basically make $3,000 before the 7 days, you can literally just buy and sell really, really quick on a micro, and it counts as a day. So I could just click buy, sell right away, and it counts as a trading day. And you just need 7 days. So depending on when you buy the account, there might be a promotion for like a 1 day pass thing, which means you don't need 7 minimum days. But depending on when you pass the account, just keep that in mind. Now, there's something called trailing drawdown, and this is the thing that sucks, but it's also going to make you a better trader. If you go to 51,000, no matter, let's say you're in a trade, and let's say you have $51,000. So we're going to pretend like we're in a trade right now. How about that? So in replay mode, all right, let me just go in replay mode. So right here, let's say sell. No, let's say buy. Okay, at this point, I'm up $15. Now, I'm actually going to use this for NQM. It's going to be much easier. Remember, this is $20 per point. So, let's say buy, and right here, I'm up $270. No matter if I sell here or hold, my trailing drawdown has gone from 47,500 to now 47,800, because no matter, like, this is called unrealized trailing drawdown, and it sucks, but trust me when I say it sucks in a good way, that it makes you so good if you get good at this. Like, it makes you so good. This is why I'm so good now, because I had to experience this and I learned how to deal with it. And for a 50K account, what I do is I'd recommend going, I risk $200 per trade for 50K. Not saying you should risk more or less. That's just what I do. So I think that's a sweet spot. But let's say you're risking $200 for this trade. And let's just do a quick math real quick. What would $200 be? Well, if I pull up the RR tool, which I'm going to go over this. I'll go over the RR tool later in this video. But let's say I'm risking 200. Well, what would $200 of risk be? It would be 10 points with 1 contract. So, because remember the equation, 10 times 1 times 20. 10 points would be the stop loss times $20 per point times the number of contract, which would be one contract. So basically the stop loss here would be 10 points. So if we get in at 18,177, your stop loss would be 18,166.75 technically. So this would be a stop loss. Now, I'm in a profit right now. And Apex sees that and goes, okay, well, the trailing drawdown was 47,500. Now it's 47,800. Okay, now it's 47,800. And even if you don't sell, it still goes up to that. So let's say that happens, blah, blah, blah. Let's say I keep playing price. And then let's say it hits my stop loss right here. I'm down $200. Now my account is at 49,800, let's say, or 700, because it's technically a $300 loss. And you can't go below 47,800 still. and you're still the same target, but that's just how it works. Now, that's going to be the hardest thing to overcome, but it's also going to make you the best trader possible, and that's why I'm so good now. And again, I'm not trying to brag, but that's why I'm good. And this is what I had to deal with. So, let's say I take a short. Let's say I just take a short right here. And let's say I'm up, and then I sell, or I cover here. Plus $600. So, what's going to happen? Well, let me tell you. Because you're at $49,700, this is not going to go up $600. This is only going to go up after you go up your high. So the most we were up was $0. The most we were up was technically, or wait, where was it? It was 50,200. So at one point in the previous trade, if you go back in the video, the previous trade, it was up $200 at one point, but then it was, or $300, but then it was a loss. So because we were up at $300, and because this was unrealized and we didn't really sell, your trailing line drawdown is only going to move back up if we re-break this level. So being that we're now at 47,000 or 49,800 or whatever from the previous trade. Okay, I think it was 700 actually. When I make the $600, I'm back up to 50,300. But this actually stayed the same. Now, if I break this level and we go down more, let's say we go down more, oops, right there, and I sell for like $700 profit, I'm now at 50,400, and this just goes up $100 more because this is the highest I've hit. You might need to rewatch this a few times. Oops, this would be 47,900. You might need to rewatch this a few times, but this is, once you can understand this, it gets easier from there. There's no other like hard rule you have to understand, but that's basically it. What else? Okay, so that's kind of how that works. So that's like the biggest thing with Apex. And then if you do reach that $52,000, which is not going to be easy at first, I failed my first couple accounts. I think I failed like literally 8 or 10 accounts before I actually passed one. You'll get an email with a certificate, and it's basically saying, and you can put that maybe on your resume. I mean, if you're looking for a job, I mean, it really shows you're a disciplined trader. You can put that on a resume, whatever, but you'll get a certificate. It'll be like, congrats on passing, and there's going to be an activation fee, which is no discount for an actual live funded account. And it's still going to be a demo account, and it's just going to be called a funded account. So the first account you actually buy, this is called a evaluation account, and if you hit the profit target on the 50K account and you hit $52,000, you get a funded account, and it's basically like $160 to activate it. And that's really good because if you can get a payout, which most people, when they get a payout, it's $2,000. Okay. When you get a payout on this account, it's going to be about $2,000 you're going to get paid out. That means you can literally buy like 10 funded accounts and still get one payout and be profitable. So if I just do the math real quick, if each activation fee, okay, it's $160, and we multiply that by 10, that's $1,600. And if I get one payout on one of the 10 of the accounts, I'm still profitable by $400. That's going to probably happen to you the first couple times because you're going to use 10 accounts. But now where I'm at, I don't even fail them anymore. So I'm like, I literally get one account and I'm up 2,000 and I'm up 2,000, I'm up 2,000. And the max you can withdraw is 2,000 for the first 3 months. Okay, that's the other stipulation. So the max you can withdraw or take out is $2,000 for the first 3 months. And it's really nice because it makes you start small. And I hate when people share their P&L because I don't think P&L matters. I think executions do. But it really makes you understand that you're going to be starting small. And $2,000 to some of you may not be nothing. But if you can get a $2,000 payout on Apex, one of the hardest things to trade, you can get a $200,000 payout later in your life. I've never even hit that yet, but if you can get a $2,000 payout, you can do anything. Trust me. Okay, not financial advice. And that's going to be a big thing. So focus small. You can't make when you actually get your funded account, because the max you can withdraw is $2,000 your first time around. Do not make more than $800 in a day. There's basically a 30% rule where if you make more than 30% of what you're going to withdraw, so if you make like more than 30% of $2,000, you can't withdraw it. So just make sure you don't go above 800 per day. That shouldn't be, if you're trading micros, which again, if you're risking $200 per account or per trade, right, on a micro contract, then it shouldn't be a big deal, because again, I could use this. So I'm going to show you guys how to use this risk tool. So let's say I want to risk $200 and I want to target this high up here. All you have to do is you have to right click create limit order. So right click create a limit order. You can literally type in the risk you want. So if you just type in $200, it'll automatically be 4 contracts. So you just click buy and it puts in a thing. So again, if I do $200 risk, it's going to do 4. If I do 250, it's probably going to do 5. If I do 300, it's probably going to do 6. And notice how the stop loss is 156, not actually $200. But that's because if you put one more contract, it'd actually be going over 200. So I think you could do 212, 218. So 218, you could do 5 contracts. So that's basically just how it works. And this is a very handy tool. You click create limit. You can type in what you want to risk. And like I said, for 50K account, I'd recommend risking $200 per trade. So for this trade, I could risk 4 contracts, and if I lost, it would be minus $156 because if I put my stop loss there. And yeah, that's like the biggest thing with these accounts. And I mean, that's really how to get started in trading futures. I don't really think there's anything else to cover, but kind of explain the rules. Just make sure you don't make on your actual funded account. That's when the rule is applied. On eval, you can literally make $10,000 in one trade on eval. Eval is whatever. You could literally trade news on eval. You can't trade news on a funded. You could trade news on eval. You can make however much you want on an evaluation account, as long as you get to the take profit or 53,000 before hitting the drawdown. Okay. And yeah, so eval, do whatever, but funded, just be very smart on a funded. Have a rule where it's like, okay, I can only take 2 trades per day. I can only take 3 trades per day. Have rules, have certain setup you want to take. Funded is a very serious thing. Eval is a little less serious, but you can literally make money with an actual funded account if you trade it right. Okay. And that should be your goal. And your goal should be making getting a few payouts on a funded account. And then after that, your goal should be starting to learn how to copy trade. Okay. And I'm not going to teach copy trading in this course, but you can literally look it up on YouTube, how to copy trade Apex or how to copy trade accounts on Tradeify, and it'll teach you how, and it's very, very straightforward and easy. But your first goal for now should be passing an evaluation account, okay, which should be your first goal, and then getting a payout would be your second goal. And that's, if you can do that in less than 6 months, good. If you can do that in a year, I think that's a good goal in a year, especially if you're just starting from scratch. And yeah, that's basically how futures work. It's what I recommend doing. I don't think there's anything else I can cover. There's also a risk tool to the downside. So if I want to take a short here and put my stop above here, just again, right click it and create limit order. Oh, I do want to go over how to scale and stuff. A lot of people don't understand scaling. So let's say I'm in a buy position here. So obviously for shorting, I could just do the same thing. Risk 200, it would be 3 contracts. 250 would be 4 contracts. Scaling. So if you want to scale, let's say I'm in a position, you can only scale with more than 1 contract. So I have 4 contracts here, meaning I could literally take off 3 other contracts at different spots. Make sure you go to your settings on TradingView, and you have to have this the plus button enabled. Where is it? I think it's the trading. there's basically just something called plus button. If I can find it. Oh, right here. So under scales and lines, click this plus button. Basically brings up this little plus when your cursor to the side. And you could literally click plus, and then it's going to bring up this. Now, right now, it's default to the 4. But let's say I don't want to sell all 4 contracts here. Let's say I want to scatter them out. Click plus, then click create new order. Click sell here, and just change the number of units. So let's say I want to sell 2 here. I'll just do 2 there. So if price goes up to here, it's only going to get out of 2 contracts. I'm still going to be in 2 other ones. Let's say I want to sell 1 more here. Now it's defaulted at 2, but I want to change it to 1. So I click create new order, and then I just do that. And this is how you can scale. And on a paper account, what you're going to notice on a paper account, let me just take this off, is you can actually drag this take profit up here like this. You can just, it says take profit, you can drag it. Same with the stop loss. On a Tradeify account, you'll not have that option to drag it. And this is a lot of people ask me about this. You won't have that option to drag it. So what you're gonna have to do on a Tradeify account to take profit and put a stop loss is, if I want to put a stop loss, you want to put plus and just do sell 1 stop. And if you're confused now, I'm gonna do the next video is gonna be on orders, like limit orders, stop orders, market orders. Okay, just bear with me. But like this is a stop loss order, and this is a sell limit order up here. Okay, so you're not going to be able to drag. You're not going to see this option. So right now I have only 1 stop loss. So, and I only have 1 contract sold. So if I get stopped here, I'm still in 3 contracts. So I just have to make sure I switch that number to 4. So I do sell, do 4, and then click stop. So if it basically hits this level, it's just going to get me out of the position. And let's say I want to sell 1 here. 1 here. It's already defaulted to 1, so I can just click sell. 1 here and 1 here. This accounts for every single one because there's 4 contracts. There's 4 sell limits, and this stop loss is also 4 contracts. So just make sure you understand that. Also, don't leave limit orders open. On Tradeify, if you forget to cancel your limit order, you might get filled by accident, and that used to happen to me a lot. Make sure you're canceling all your limit orders. You cannot swing trade in Apex. You cannot hold past 4:59 p.m. You have to close all positions at 4:59, and you can reopen positions at 6 p.m., which you should not be trading at 6 p.m. That is Asia session, and yeah, just don't trade at 6 p.m., but I'll go over that in another video. And yeah, that's really how Apex works. Remember, you're not going to have this. You're going to have this on paper trading, but you're not going to see it on Tradeify. This isn't other brokers like AMP. I think it's on AMP. It's on TradeStation, I think, but it's not going to be on Tradeify. On Tradeify, you're going to have to do it manually, and yeah. So again, if you want to scale, make sure to click this plus button, click create an order, and you can scale. And yeah, that's how to kind of take profit and scale. And the next video, I'm going to be going over like market orders and stop orders and the difference between all those for people who don't know. And yeah, I think that's it. Other than that, peace.